Hello, chart watchers and Decision Point faithful. Welcome to this Thursday morning, although I have the 15th because we are recording this Wednesday evening. But welcome to this Thursday morning, July 16th Decision Point show with your hosts, Carl and Erin Swenlin. For those of you joining us for the first time today, we want to welcome you to the show and hope that you will become a regular Decision Point faithful. All right, let's get ready with the agenda, but before I do that, how's everything going with you, Dad?
Pretty good.
You survived while I was on vacation.
I did, yeah.
Fortunately, I didn't make you do too much work, so that... All right, well, today's agenda, of course, we'll go over the indexes, the Decision Point Scoreboards. We did get a new signal today. And then I wanted to look a little more closely at the dollar because we got a new signal, long-term signal on the dollar. I think it's still intact, but we will go back and take a peek. Then I wanted to cover gold and gold miners. These are, two areas that we normally focus in on. I've been really paying closer attention to gold miners. I do own Newmont Mining, so I've been paying extra close attention for my diamond subscribers as well. And right now I still am liking the gold miners. Then we have Carl's grab bag. He has a bunch of charts he would like to show you, and we'll do that. And then at the very end of the program, of course, I will give you my Decision Point Diamond of the Week. And it comes from yesterday's Diamonds report, so you can take a peek at what it did. And I definitely invite you to check out our website, decisionpoint.com. We really love what we do, but we can't do it without subscribers. So if you haven't checked us out, recommend you try our DP trial out. Just subscribe to the bundle package. That'll give you the Decision Point alert and the Decision Point Diamonds reports, and you can look at those for a week. And then also, we have the archives since January of both of those reports. So you have that week, but you also have that week to go back and look at all of my diamonds from before and all of our DP alert reports so you can get a feel for the way we do our analysis at Decision Point. So hopefully you'll take a look at that, and there is your coupon code. All right, so let's start off with these Decision Point scoreboards. As I mentioned at the beginning of the program, we did get a new signal, and you can see that right here. The PMO crossed over. We had a positive crossover for the SPY and the S&P 500, and so I put in our new PMO buy signal there. When we look at in total what's going on, right now, I think that does need to be updated because I know the NASDAQ 100 does have buy signals across the board. So we are continuing to see the technology biotech sector of the NASDAQ really outperforming the S&P 500, the Dow, of course, and the S&P 100. But we'll go ahead and take a look at those charts in just a moment. Before I do that, I want to show you our Decision Point sector scoreboard. And this gives you an idea of what our signals are in the intermediate and long term based on our trend model. So if you see a buy signal in the intermediate term trend model, that means that you have a 20-day EMA that is above its 50-day EMA. And we call those a silver cross when you get this 20-day EMA going above the 50 days. So that's what those buy signals are listed as. And then as far as the long-term trend model buy signals, those are generated by a golden cross, the 50 crossing above the 200. And then of course the sell signals you can equate to the death cross of the 50 moving below the 200. I do want to point out these sell signals that are here in the intermediate term. Generally, when you we do a buy, or we do a neutral, or we do a sell in the intermediate term. When you get a sell signal, that means that you got that 20-day EMA crossing below the 50 while under the 200-day EMA. So these are, these are more of a hard sell type of a signal, whereas when we go to a neutral position, it's basically the same sort of thing. We get the 20 negative crossover with the 50, only it's above the 200. So that would give you a neutral. But right now we're showing two sell signals on utilities and on energy. All right, but let's go look at some charts. because I know that's why most of you are here. So let's go ahead and we'll start off with the SPY. And I did just get back from vacation, so I haven't really had a chance to chat with you much, Dad, about what you're thinking about the market. So do add your 2 cents in there, or a couple dollars, whichever you want to do, and let us know what you're thinking.
I'm just waiting to hit the wall.
Yes. So here we sit. You know, I was looking at this on vacation. Of course, not a whole lot happened, really. We've been in this trading range now that really I think was established a couple days ago. We were looking at a symmetrical triangle here for a while, and that never really did much. We technically got a breakout from it, but moved sideways, you know, consolidation move. So I pretty much scrapped that as what I was paying attention to, and really focused in on this trading range right now. But yesterday, when I was looking at some of our indicators, they actually were beginning to turn a little bit bullish. And so I did a rethink, and I have this rising bottoms trend line, and we have the horizontal resistance level here, and that, you know, could be forming an ascending triangle, and that is a bullish formation. It's really hard for me to get bullish these days, but if I turn off the business news channel and I look strictly at the chart, you know, I'm seeing this particular pattern. It's a bullish pattern. I certainly think there's the possibility of a breakout here, but we'll have to look at those indicators a little more closely.
You know, you're going to be less bullish if you don't look at the TV business channels, because they're just gushing bullishness all the time. So.
Absolutely. And, you know, again, there's a little bit of a frustration factor here, I know, for us, and probably a lot of you out there, because we do, you know, look around and we can see what's happening with employment and businesses and the craziness. And now we've got the second wave coming here with the virus. There are a lot of uncertainties and a lot of problems that really would tell us that we shouldn't be looking for higher prices. But you know, when I when I look at this pattern developing, and we'll look at a few of these indicators,
Well, you know, it hasn't been the market. You know, you get a down day like we had Monday, and but basically, you just don't get the feeling that it's ready to let go and just start crashing down. I mean, it wants to go higher. This way it feels.
Yes, it really, the bulls are pushing against this resistance, which I think you can see a little better on this daily chart here, the 1-year daily. That gap resistance has just really been sturdy. It just doesn't seem to want to give. We're getting this is going to be really our third try at getting up into that, if you count Monday's move to the upside, where it did attempt but never got there. Now, technically, I know that the high for the day is higher than this previous top, because I was looking at that just as far as numbers to see, did we really get something that could be considered a breakout here? And really, I'd say no. And one of the things you can notice too, and I go back to this candle, and you can look here in the thumbnail, it's not a it looks like a hammer. It's not really a textbook hammer, if you will, but the idea that we came up, we went way down, and then we closed at the top, that's usually considered a bullish sign. You know, you came down, but the bulls pushed it back up. Now, this is coming not off of a major decline, and usually you see those hammers come in at the bottom of a pattern, not at the top. But I just wanted to point out the fact that, you know, we had that big decline, but we managed to come back and close near the top here, but not quite higher. The close was not quite topping the close, I think, back here.
You know, Erin, one of the things we should consider is that people who back in March wished that they had gotten the hell out are now reaching that point when you know, if I'd only gotten out here, and
yeah,
so yeah, that's a considerable amount of resistance that they're running into.
Right. Yeah, and it's really interesting, because when you look at a NASDAQ chart, I'm going to go over here to this list. It's just, it looks totally different. Actually, we can look at it here. Hang on, I'm going to go back. I have a broad market index one that you have in here, so just be a good look here. You can see really similar price action on everything but that NASDAQ. The NASDAQ just doesn't, it's already beat those prior all-time highs. It continues to try and make new all-time highs. The rising trend just isn't really being broken. You know, yet we still have all of these other portions of the market that just aren't as healthy, if you will. So it's just interesting to follow up. I think that really the technology and biotech sectors are really the ones that I think are holding up the NASDAQ and really pushing it higher, because those are the areas that people have been moving into as they've been getting back into the market. But I thought that would be an interesting chart to look at. All right, so let's look just a bit at some of our indicators. I'm going to show you our Swenlin trading oscillators right now. So I did note, you know, once we made that cardinal top, if you will, 2 days ago, that we did show these negative divergences that were coming into play. But as you can see, coming out of that, we had that the decline. It was on Monday, even though we set a new high, intraday high. And then we had a big day to the upside yesterday, but you can see the tail on that came just out to the bottom of that rising trend. But what I'm noticing now, and especially with the indicators that came in today, is that we are starting to see a rise on those Swenlin trading oscillators, and we've stayed in the bullish side of things as far as our bias is concerned. So we still have a bullish bias. I mean, and we're starting to see the trading oscillators move up. We now have some pretty healthy readings on the S&P with the stocks that are, their price is sitting above those 20-day EMAs and even above the 50-day EMAs. And I'm sorry, this is the PMOs rising, but we're seeing an increase to the positive side here on these indicators, and it's really, it's just, you can't totally argue against those. And then these are the intermediate term ones that I was going to point out as well that are also rising. And then here are those percent PMO crossover buy signals. So the number of S&P components right now that have their PMOs above the signal line are 37%, but it's gaining, and we really did see a nice pop today on that particular indicator. All right, I promised gold, I've promised the dollar, so I'm going to do those, and then I'm going to hand it to you, Dad, to look at some of the charts that you had. But UUP is what we follow for the dollar, and we had a long-term trend model sell signal. So this came in when the 50 crossed below the 200, or a death cross, if you will. We were already seeing that PMO trying to turn over. And now we do have that sell signal. That PMO sell signal did come in today, along with that buy signal for the S&P 500. And it's not only a top below that signal line, but also that sell signal well below the signal line. And now we have that breakdown that we've caught right here. It's been able to hold.
You mean the zero line? The
zero line, yes, below the zero line. And, you know, now we're finding that support level. I was looking at $26. We were, you know, I was expecting it to test it based on the PMO, a likely decline below it, which is what we have. And the close was 5 cents under $26. That was really my key level of support there. But I wouldn't, it's not a significant or what we call a decisive breakdown here. But, you know, that double top formation or a rounded top, however you want to look at that, with that PMO put together, just not a good combination. And I would expect to see the dollar continue lower. It looks like this area is just not going to hold up anymore. Gold. What have you been thinking about gold lately, Dad?
No, I'm liking it.
Yeah, I can't say I argue with you. I was a little concerned yesterday when we got that tail that just came just below that rising trend line, but the 20-day EMA is holding up just beautifully. The PMO did flatten out, but I believe it is rising now. I'll have to double check that. RSI, we're not overbought as far as that price point is concerned. And, I'm looking at I'm looking at higher prices for gold at this point. I just don't see anything negative on that chart.
I agree.
Yep. And here are gold miners. And I have to say, I was really close to pulling the trigger after that decline that dropped us well below this rising bottoms trend line. Excuse me. I did tighten my stop on Newmont Mining, but I set it for just below the 20-day EMA. And so I'm doing just fine with it. We got another price rise. It's trying to bring us right back up on that rising trend. And looking at these indicators, it's just hard to argue the positive, the bullish bias going on right now for miners that, they're also managing to take advantage of the rise in gold as well. But these numbers will all support rally at this point. Yes, they're overbought. I mean, 100% of the GDX components have their 20 above their 50-day EMA, and 100% of them have prices above their 50-day EMA. So all of that is good news and certainly can support, higher prices at this point. All right, so I did my gold and gold miners. I'm going to hand it to you for some grab bag charts. What's been piquing your interest lately?
Okie doke. I want to start out with cruise line. It's just a short bit on that. When I woke up this morning, they were talking about the cruise lines, and here is up 21%, right? And this is Royal Caribbean, and there's actually the wrong one. No way. And here's the Norwegian Cruise Lines. It is up 20%, almost 21%. And I thought, geez, wonder what that is. I missed the story, if there was one at the time. So I looked it up, and oh yeah, they were downgraded. The cruise lines were downgraded by some brokers today. So yeah. So wait a minute. Is that supposed to make them go down?
Right.
I mean, this is how nutty it is out there.
Absolutely. And I have to say, from my Market Watchers days, it was interesting because I would cover the upgrades and downgrades. And it was really apparent to me that a lot of those upgrades were coming in because those particular houses must have had a lot of that stock to sell. And even though the charts didn't look that great, they upgraded them. It's almost like a way to just draw people in, but a lot of people don't pay any attention to it, I think, anymore. Obviously, right. Cruise lines, that's like with the others, though, speculative, right now, because there's no, there's
no rhyme or reason, no.
Exactly. It's more, I'm going to get in here and try and make a quick buck, and then I'm going to get out because they're just so depressed.
Several weeks ago, I talked about bankruptcies. And if there's any industry that's going to have tons of them, it's the cruise line industry. I mean, most businesses, and certainly this one, can't operate at such a reduced capacity. I mean, it can't be done. But
yeah,
one of the things, excuse me?
Yeah, and these are not like too big to fail kind of things, like airlines.
Right.
I don't see the government getting too worried about a cruise line going belly up.
Who knows? It's just nuts. I mean, every industry is important. I guess that's really what it boils down to, because this industry generates, revenue, pays people, those people who go out and buy houses, on and on, Mm-hmm. So it's just, say, bankruptcies become more common in this industry and elsewhere. The one thing about it is they'll be so common that they won't be looked upon with such disfavor. They'll be so
You're right.
And so, and again, it's like, okay, there's always been bankruptcies. Let's buy some more.
Right.
So it's going to work. led on my weekly wrap this last weekend, led with the technology sector and saying it's really a problem. We've got that making new highs, like with the NASDAQ here is and we've got a lot of negative divergences, and they're a lot more severe, or at least as severe as what we had back at the grand top over here in February. So um, I'm not still, I see some alleviation here with improvement on stocks greater than 50 and greater than 20 EMA. But still, there's a divergence, and it shouldn't be making new highs with that kind of a divergence. Improving, but still, this leading sector, it shouldn't.
Yes. Yeah, I mean, it's really the NASDAQ has been holding up a lot of the market, I think, and certainly the FANG has been part of that as well. But yeah, those divergences are pretty significant.
But these, okay, the PMO, the MACD, those are those kinds of indicators, the ABX, I mean, they're kind of esoteric. But when you look at the bullish percent, that's point and figure buy signals, percent of point and figure buy signals. So, that's easy to understand. Same with the Silver Cross, and stocks above their 20 EMA and 50 EMA. Those are important indicators because they show where weakness is coming in and where the strength is coming in.
Yeah, not a good look.
Okay, let me try. What do I got? This one, I think. Yeah. Let's get the earnings. We're still almost at new highs and all-time highs, and yet here's the earnings curve headed downward. This bounce here is this is for Q1 2021, and basically, let's just, for those who haven't seen this chart before, the red line shows where the S&P would be if it had a PE of 20. The blue line is a PE of 15, and the green line is a PE of 10. It's undervalued, fair valued, and overvalued. And it's super overvalued now. And based on forward earnings, it's still, at this point, it would be, I think it's about a PE of 35. As of today, it's a PE of 27. But this little bounce here that we got is completely a fantasy at this point. Just think of it as a fantasy because it's their best guess. It's a wag, wild, audacious guess, and it's who knows what that's going to be. So I wouldn't count on this being anywhere near this good. Okay, what was my next? Okay, and this is when I look at, again, stocks above 20, 50, and the 200. And you see they're still for the S&P 500. This is pretty severe. Still, the amount of the negative divergence we have here. This is at the all-time high back in February, and this is how the kind of divergences we had there. So I just say, be careful. I'm not, you can't run around with your hair on fire and quit everything at this point, obviously. But this is a danger sign, and so watch out.
Right, exactly. Read the DP alert, because we will give you our up-to-the-minute information on all of these. And it's been very difficult, but we still have been bullish when we've needed to be bullish here. And these are the kind of things that tell you, okay, maybe I need to tighten my stops. Maybe I need to be a little more cautious as far as adding to my portfolio, because all of these things do tend to culminate in declines. I mean, you can see right there on that chart all of the areas where we've had similar divergences and what it led to, and none of it was good.
So I think it's probably time for you to do what do you call it?
Diamond.
Yeah, the diamonds.
Diamond of the week. Yes. Okay. So the one I picked for today, all 5 of my diamonds yesterday were up over 1% at least, I think, for all of them. But I thought this one was the best in terms of growth perspective here, because a lot of them that I presented yesterday were already on a big run. And this one I feel like is getting ready to come into a big run. There are a lot of things that set up really nicely today. And we got a gap up that broke us out above the confirmation line on a double bottom, which is, those are the kind of things you want to see. Typically, when you get these big gap ups, you're going to see some follow through action to the upside. And if this double bottom were to resolve and meet its minimum upside target, that would bring you pretty much right at the top that we had back here in June. And I don't see any reason why we couldn't challenge that. You've got a couple of good things going on beside the fact that we had that double bottom. We have the breakout now. We had it yesterday, just a teeny tiny breakout from that declining tops trend line. But it was looking ready to set off, and sure enough, it did. And now we have that RSI rising. It's even more into the positive territory above 50, which is what we want to see. And of course, you've got a PMO buy signal that just came in. Yesterday, we didn't actually have that signal, but it is here now. So I do like that. And you can see in the thumbnail right here that the OBV is confirming this move to the upside. I would say if there's anything that I maybe could say that isn't optimal right now is that we didn't see the OBV. We ended up with a reverse divergence so far, in that the volume, or I'm sorry, a negative divergence is a possibility here with this breakout, because we didn't see the volume come in and get us a similar breakout on the OBV. So that's something that I'd be watching for. And of course, the scooter has not hit that hot zone above 75. But again, I think we might be catching this one early enough. The materials sector has started to perk up, and I like that as well. Now, when I do my diamonds, I always will put in a what I call a stop level possibility, just to give you an idea of what you can tolerate, what you don't tolerate, but just based on some support levels or areas that, for myself, that, I wouldn't, if I owned it, I wouldn't let it get much further below that. In actuality with this one, and I did mention in the diamonds, is you can set a pretty nice little stop here. But honestly, if I lost this, if this turns out to be an island and you started to lose that momentum there, you have all of these EMAs that are all bunched up together. If it lost those EMAs, I wouldn't want to keep it. So, I would set a tighter stop on this one, or at least be watching for my entry to make sure that, I've set myself up, to get in or not get in based on these moving averages. And so for me, that's what I was looking at. And I think I have a weekly that I'll show you real quick, and then we will head out the door. And here's the weekly chart. I was looking at the current pricing, and there's upside potential here up to 17% gain. You could see that weekly PMO is just bottomed above the signal line. That's it for Decision Point today. Hope you enjoyed the show, and happy trading.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.